Hello, Black Ops, welcome back. So, quite literally, bro, quite literally after work, without even resting, I came here for you guys. I came here. I need to finish this shit. I need to finish this shots, these screenshots, these charts, and then jump straight to the live trading. Okay, live trading. Okay. So, on the previous video, previous episode, we have seen this pump, we have seen this price just going straight to this neck. This neck right there, that's TP to us. You already know this is what we are targeting. When you are entering here a buy, you are also targeting this one, not only this one's TP2. No, it is this one's TP2. Okay, so this one's TP2 is also the same thing. I already told you that this was a beautiful buy rise there, down there. Why? It's because the stop loss is down there and the entry up there. Risk, potential profit. That's reward. That's reward. That's risk. That's reward. After this thing has formed, it even made sure that we are reaching up there after this break high. Okay, after the price has broken this one, you already know we are moving up. Simple as that. It's simple. It is simple as that. First thing, we traded down, we broke. So this is the whole thing, this is a black box. Then we traded more and broke the 2.5% down there. What does that mean? It means that we just traded down. Now, the chances are getting slim and slim for the price. The price is getting stuck. It's only, it has to move in one direction. It has to only move in one direction because it blew all its chances. So, how did it do that? How did it blow its chances? The price just broke the downside, which it shouldn't do. And then, it broke the upside. Now, what does this signify? It is a certain model. We broke to the downside, then broke the upside. And I told you that the third model never fails, bro. I mean, there are some other models, but the third model, bro, if you catch that move, bro, if you enter that third model trade, bro, it is gonna move like nuts. It is gonna be a huge peep, a huge profit, a huge point if you are trading Nasdaq or ES. Or even gold or silver. And then, so it already showed its hand up there. What does that mean? When I enter a buy, I'm not gonna enter a buy down up there. Why? My stop loss should be down there and my entry up there, look at that. Crazy risk, not gonna happen. What am I gonna do is, I'm gonna consider entering a buy this one. Right there. This one is practical. It is achievable. It is comfortable for me to take this risk. Why? Look at this. It is a little bit, it's not too much. And my potential my potential target is TP2 up there. So as you can see, so I am only entering this block, below this block, and right there. That is where I am gonna enter. So this and this, that's potential. And let me tell you something. This price never looked to the downside, bro. Never looked back. So I am telling you, bro, this price pumped up to here. I'm telling you, just because of this. Why? Because the risk of this getting in here, it takes into account 1-to-1 is achievable, bro. 1-to-1 is a must. I have already proved this shit over and over again, even before discovering the two candles black box, bro. Please don't argue. Just go on to the charts and validate yourself, validate it yourself. Okay, there's nothing to quarrel about here. So TP1 is a must. TP2 is our minimum target. TP2 we will take our partials because most of the price reverses direction as it rises there at TP2. Look at that. Look at that. That's TP2 right there. Pumped, and we need to see some pullback into this black box, and then a second model. The second model will surely happen to launch this thing to the upside. Okay, that's the thing that we have seen on the previous episode. So now let's pump it to this one. Do you see any black box here? Yes, well, 1, 2, and 3. Why? Because these two candles traded overlapped on each other. Perfect. Now all we need to see is for the third candle to trade at least to 23.6 or 78.1%. If we are buying, it should touch the 78.1% up there. A little weak, and then we are done. We are entering a buy. If we are selling, already shown it's down there, and it trades 23.20. Oh my god, what is that? 23.6, I think, something like that. If it touches that, and then we are done. So as you can see here, it definitely touches that one. So our 100% is 1, and this is 100%. And then look where it went. It even touched the 33 point something, approaching 50%, but it never did. It dumped. What does that mean? It means it is sale, baby. It is sale. Where is our stop loss? I already told you, 2.5%. As you can see, if you don't know the 2.5%, you can use the grid. You can use a horizontal grid. Okay, what is that? Look, this grid down there, and look up there. That grid. We have a grid, right? This grid. This is a grid. Look, it never ends. It never ends. It is equally divided. It is equally divided. Okay, it is equally divided. Equal. The distance between them is equal. It is not different. It's equal. So as one you can use a grid. This lower grid, the price did what? It pumped and it traded at least halfway, right? So your stop loss should be above that grid halfway. Simple as that. Clean, bro. It is clean. There is no worry. There is nothing. Clean, bro. It never comes up there. The price never comes near your stop loss. Look, the price just traded up. Your stop loss up there, it's never close, bro. Dump it. What does that mean? You measure your TP2, bam, your TP2 is right. What does that mean? That shit is sale. That thing is a sale. Until my stop loss is triggered, I am selling. Still selling. Still selling. Target down there, bro. What is the key? What is the signal? Right there. Right, you can use a grid. Look, halfway, enter sale. Simple as that's clean. It is clear. Bam. And then what happened? My price just made another profit. Bam. It traded down. What does that mean? Again, that's the sale. You measure your TP, and your TP could be down there. TP2. What does that mean? Never hit. Another sale up sale. Every black box can be traded. You can trade every black box if it satisfies the criteria that I have talked in the earlier episodes. From episode 1 to right now, you have to watch that shit. You have to watch the video. Otherwise, it is not gonna be enough for you. If I tell you this, do this, stop loss down there and there and enter there and then. When the price challenges you, you're gonna panic and get out. You will get out without even knowing what's gonna happen, what is gonna happen, because you didn't see. You don't know what the price did in the past. That's what we are exploring here. We are attacking every angle, so that if you know 90% you can win, what does that mean? It means it is guaranteed. It is guaranteed. If you know you can win 90% of the time, what does that mean? It is guaranteed, bro. You have already covered 90% of that shit. 90% of that thing. You have read, you have implemented, you have taken action, you have intraday trade, you have sold, you have bought. And you know everything. What is gonna happen, you know. Even if there is 3 or 4 models, you know which one is most likely gonna happen. Okay? So it is better to follow along starting from episode 100. Please, I'm begging, I'm telling you. Just because I rant on this blank chart and you think that there is nothing here, bro, you are missing out big time. You are missing out on a lot of things. I have dropped a gem here, a gem. You're not gonna get it if I tell you follow these 10 rules and follow these 10 rules and you'll be profitable. Not gonna happen, bro. You will make one mistake because you don't know everything. Right here, when I interpret every black box here, I never left it. Oh man, it is not my setup, bro. Now I'm gonna pass it like I didn't see it. No, I didn't do anything like that. I have talked about every black box, bro, everything, bro. We cannot let any leaking. We cannot allow any leakage, bro. It cannot leak. If it leaks, then everything, every water you put upon that jerry can or that container, you're gonna lose it by the end of the night. Why? Because it is leaking down there, bro. It is leaking down there. And you don't know what's happening. Who is drinking this shit, bro? I'm putting water every time and every day, every hour, and it is not even full. What is gonna happen? What's happening, bro? You didn't know it is leaking down there. So every leakage should be plugged. We are minimizing our loss, determining where our stop loss should be placed. Why? Because we know that most of the time price just respects that place, and we know that is a red line. Guys, that's how I determine this shit, bro. That's how I knew about this. I pumped. I traded. I followed every accumulation distribution, every flag pattern. And one thing was for sure, bro. And this shit has a way. This shit has a simpler way. You don't need any RSI. You don't need any stochastic, bro. 30 is this 70% sales that shit, it is overbought. No. I have seen markets like crazy. They are overbought and they keep moving, bro. They keep moving. They are trying to break the screen, bro. They keep moving. It never retraces. You sold the riser, it's going up. Your stop loss it. You sold it, your stop loss it. You sold your stop loss it. You sold your stop loss. What the hell is going on? They are following me. It seems like I don't make money anymore, bro. Why? Because you are following a dumb shit. You are following a dumb strategy, bro. That does not work. That is not proven. So anyways, enough hunting. Let's jam this. So sell and sell and sell. Okay, right. Why? Because look, that is a wick up there. That's a wick. What does that mean? That it never went up there as your stop loss. Your stop loss is up there. Then another thing forward. It never ends. Sell, stop loss up there. TP down there. The same thing down there. For this one down there. 30% off. 30% off. 30% off. Right there. Price dumped. TP3. TP3. TP3 for this one. 30% off. Right there. Done. 30%. 30%. Done. Now it is time for your stop loss to come down there. It is time. It is okay. It is far away. There is a reason that I told you to put your stop loss after TP3 has been hit. There is a reason. Number one, the pullback never reaches your stop loss. I mean your entry. The pullback never reaches your entry. Sometimes it might, but it never reaches most of the time. Okay. Second, we know that if it hits TP3, most likely it's gonna continue moving to TP4 and then more and more. Why? Because there is a bigger black box that is still undelivered. That is still not, TP is not hit, TP2 is not hit. There is a reason. Price cannot just move like this and let me go there and then oh my god, okay, let me go there. Okay, let's see if let's see what happens and let's move up there. No. Everything is planned. Everything is planned. Every consolidation is a time delay, killing time, and also taking orders. Killing time, taking orders. Without orders, it won't. What is the point? What is the point? If you are gonna program a buying and selling algorithm, you have to place a code that accepts trades, that accepts orders. It has to, at some point, it has to stop and accept trades, orders, and then pump. Right? It has to. If price is moving like this, it is not trading. It is not trading. So it makes sense. It makes sense. When it was first designed, they accounted for it. This was accounted. This was important. It was important. It was important. Price cannot dump without a reason. There was something that it needs to reach. There is some point. Here is a TP2 for bigger blocks. So when was this is it. We took partials, and then the price just kept going. So now it's time to trail TP2. When TP4 is nailed, you trail TP2. After that, you can trail TP3 and put it because you don't want to lose money. Okay, after this, bro, man, bro, making a lot. Even honey, when you eat a lot of honey, bro, feel sore because you ate a lot of honey, and when you put one more, it is gonna feel sore. You took too much. It is too much, bro. It is too much. So, in order to maximize our profits, after TP3, it has to be closed. After TP4, to close. Ready to close. You can't even get out, but I don't recommend it because the price is just sometimes it is crazy, bro. It can't move like crazy without looking back, which means a potential profit without risking anything. You are in profit, baby. So anyways, this is it. This was the writing that signifying TP2 for this and TP2 for this one too. Okay. The reason I focused on this is you already know. which is similar in shape, this one and this one, or this one and this one. It is this one, bro. It is this one. If all of them were similar, why? Because this body is bigger. This body is bigger than these two. If all were similar, I'm not gonna measure this breaking candle. No, it's not gonna happen. That is not important. I'm gonna measure this body, and I take my partials down there, and TP3 would be up. But since it formed another cluster here, unique, I have to focus on there. So that's it. Simple, clean. It's clean. Now let's jump to the next one. It's the same thing. It's without drawing, so yeah, no, nothing to see here. So here, what do we have? A black box. Where? Not here, not here, not here, not here. There and there and there. Pump. That's it. Bye. Jump stop bros down there. Why? Look closely. Look closely. This is a grid, right? It touched the grid. It touched the grid. Look what happened. It touched the grid. Never went one tick down. It never did. Never, bro. The program was by program, bro. This whole thing was a break and retest, a second model. This whole thing was a break and retest. It never went one tick down. If it was the case, that was the case. If it went down a little bit, then this whole price would have been dumped. Most likely. I'm telling you, bro, take my word. The price might have melted down instead of pumping. See, look, the price just went and trying to seek higher price. What does that mean? So I said buy. Where? I said, where is your stop loss? Where is your stop loss? If you catch this shit, if you catch it. Actually, this is a black, this is a silver zone. I already told you. And this is the what? It's a golden zone. Everything here is a buy. If it comes down, another buy. Depending on your risk, okay? So, your stop loss, for God's sake, look. Your stop loss is there. No, a little bit. To make people panic. To make people panic and lose their mind, you're gonna put it a little, one tick, bro. If you are trading futures, because there is no spread. If you are trading forex, you're gonna account for the spread. The spread will get you out of the trade, even if it is still actually didn't hit your stop loss. Since if there is a spread, because if you are trading, there is gonna be a spread. Believe it. So that's how they make money, bro. So if you are trading Nasdaq and S&P 500 and this gold and the indices like German 40, Prime 40 or something like that, Nikkei, Japan 225, then you're not gonna have a spread, or there is no commission. There is no commission at all. Okay, indices are free. So on indices you can put a little bit a tick, bro, a point, bro, a little point down. That's it. That is it. All you have to do, bro. I'm telling you. So this is the grid, and you're gonna see the grid. What did the third candle do? Okay. What did the third candle do? Okay, there 1, 2, 3, right? We pumped. No. Before that, we dumped. We're not gonna consider. Okay, actually, oh my God, it started from there. So look. Okay, if it had made the low, then I'm gonna consider that low, and I'm gonna use that lows, not this candle's low. Why? Because that is a lower low before the break. Before the breaking is every low that is before the breaking, I'm gonna use that as my stop loss down there. Look, looks like I made a mistake here. Why? Look, this is the what? So since it is below the grid, it traded below the grid. What does that mean? This price has every reason, this support has every reason to come down there. So you can account for that one too. A little bit take down, a little tick or 1 point down below that week. Down there. And that's a buy. Simple as that, okay? I have corrected myself. I thought that this thing was the low. Right there, this one. But when you look back, this is a black box, right? So that's the low. That's the lowest low, right? So we are buying, we are gonna see the lowest low. We are selling, we are gonna see the highest high of the 3 candles. Simple as that. Then the market pumped and it went to never be found. So here, what did I say? Not worth it. Don't trade. Not worth it, don't trade. Why? It is because TP2, look, TP2 was nailed up there. TP2 was nailed. So when you measure from, when you find these kinds of dojis, what you're gonna do is you're gonna use the wicks. The wicks means this second low, the lower lows and the equal highs. The lower equal highs and the higher equal highs, because it's a doji. So TP2 is actually up there. So it's my measuring mistake. It's my measuring mistake, okay? That's why we are entering a buy down there too. We are entering a buy up there too. Why? Because it is because the measuring should be up there. That's the equalize. Why? The black box starts there, there, there. That's what we consider. So that's equal highs and then equal lows. I'm not gonna up and down there. I'm not gonna measure down there. It is a single wick and it is not important. You're gonna use the equal highs and equal lows. Okay. And then when you project it is gonna be up there. So it went a little shy. Then dumped. What does that mean? So the left is there for liquidity purpose. I mean to trap people. That they're gonna sell and then put their stop loss. The people, when they see this big candle, they're gonna put their stop loss up there. And then after supporting here and taking liquidity potentially, as you can see, liquidity is taken, even though our 2.5% was not triggered, they still took the liquidity. The reason why we place our stop loss down there is for this particular reason. Bro. They play dirty, bro. They took the high and made a swing high. They took money already. They already took money, bro, from up there. And they entice people to put money up there too, by putting the stop loss, by dumping it. They put another money up there. Okay, this money is gone. Everyone is done. It is executed. It is out of the trade. Everyone's stop loss is gone. Why? Because everyone is putting the stop loss up there to sell, but the market pumped. So the money up there is gone, and then they entice people down there, moving down. They hunt down there too, because there is money down there too before pumping. Okay, look the logic here. Okay, they are hunting. So what happened? New trader puts a stop loss up there and sells. It is done. He is dancing. Why? Because it is pumping to the downside, right? Then everyone who is buying down there puts a stop loss down there. Bam, trigger. But we are smart, baby. Our stop loss is down there, away from the fire. Okay, away from the fire. So it's getting dark, so I have to close this video and see you the next time. So let's finish this for you. So away from the fire, our stop loss down. We don't care what's going on upside. We really don't. Everyone is getting kicked in the butt, and we are laughing. We are laughing because we are black boxers. We know what shit is going on. So they took money up there. They took money down there again. They put money up there. Now it is time to take that too. So 3 places that they collected money. It is ridiculous, bro. Now they are the only one who is gonna buy this one. Wait. We are here too, bro. The black boxers are with the smart money. I don't care if it is smart money. I don't care if it is a big money. I'm gonna catch every move you make. Every move you make. I don't care if you are George Soros. I don't care if you are who is this guy, bro? I mean, the biggest stock market trader. If you are a biggest hedge fund manager, I don't care. I'm gonna trade with you, and I know how. And I'm showing for you guys everything. So here, that's a buy, another buy. So place down there. That's take profit. That is take profit. For which? For this buy and for this buy. Okay, pump it, take profit. Then TP3 is most likely up there, triggered, take profit. Okay, for this one, you can forget taking profit this one because it's your entry and your take profit is at the same place. So you don't have to take profit up there. Okay, take profit at TP3. Okay, but for this one you must. That's a lot of pip right there. This huge move is a lot of pip. So take profit up there, and then at TP3 take profit again, and then for this one to take profit. And then now it is time for trail your stop loss at break even. Simple, beautiful. That's the whole business. That's all. So next time we will see. This is the same chart but without the drawings, so we can jump. So next time we're gonna see this pump. It is gonna be a hell of a lesson, bro. When this kind of shit happen, bro, you're gonna make big money, bro. I'm telling you. So stay tuned. I'll see you in the next one. Thanks for watching.